Yes, Benny.
Yes, Benny.
Yes, okay, very good.
Yes.
Now, there are a few things which I want to share with you. Let me see. Let me drag the charts. New share. Share. Okay, can you see my screen about this inflation, CPR inflation in US?
Yes,
What do you
yes.
see? Is
The
that
You
graph.
inflation?
see a
The
bar
graph.
chart. Benny.
Okay, bar chart. Okay, very good.
Yes.
Yeah, that's what I want you to see, right? Now, this is the inflation, CPI, the inflation in US. We can see that last in July, it was 5.4% inflation in US, right? And all along they are talking about 2 to 3%, but in fact now inflation is already surpassed, way above their 2 to 3% target. It's already 5.4%. And last August, we can see there's a slowdown in inflation by 0.1. And this is exactly what the Fed was saying. They believe that the inflation is transitory, right? They don't believe that this is going to be long lasting. And what they say was this inflation was caused by the supply chain broke down, right? Because of the COVID and because of high freight costs. That's why you can see that the demand increased, but lack of supply, and therefore the price across the board all increase. And what they think is after some times we should see the price come back, inflation come back, revert back to normal, because the supply will by then will back to normal, and therefore we should not see the inflation. That's why they believe that inflation is just temporary stuff, right? And this is very important, because why I bring it up now, because we have been talking about expecting the inflation to continue higher, and this Wednesday we are going to have this FOMC meeting. They are likely to talk about the tapering, right? And of course, tapering is has got to do with the money supply, and they are not ready to. Of course, they are not ready to up the interest rate, because first of all, they have to slow down the tapering, the QE, right, before they can talk about increasing interest rate. But the market is always forward looking, right? So the market, in fact, already pricing some kind of interest rate high, and that's why that's why I think that this is important report for this particular month, because Wednesday is going to have a meeting, right? And with this inflation report right now go down by 0.1, no doubt is negligible. But if this is according to what the Fed projections, they are expecting from moving forward, they're going to see the inflation keep going down, back down, and now every month after month. Now, if this is the case, then they are likely to stand on their policy for easy money policy, and not to increase interest rate until 2003 or even 4, because we can see the US economy is still not, I mean, not just US economy, the worldwide economy is not really in a good shape yet. And then in US, there are still a lot of people actually are unemployed, right? So with it, that's why I think that with this report is very important, because it basically, I think, I don't know about you, I think that this gives the ammunitions to the Federal Reserve to say that, well, you see, inflation is not has started to reduce, right? So they are right all along. Okay, so they might say that, and therefore they will not be that hawkish after all, right? And that if that's the case, that it should be good for this stock market and risk on to be continued. Okay, so this is something that we need to pay attention by this Wednesday when the Fed meet up. Now, the other chart, which is also very, very important, which I want to share with you. Let me see, where is it? New share. Okay. Now let's go back to the chart again. So there are 4 people waiting. Okay. So new share. Can you see my chart now? Yes, no?
Yes.
Okay. Now let's take a look at this very, very important chart. We all know this chart, which is VIX. Right, VIX. Very important chart. Now look at VIX. Right, it spiked up. Right, from last week, it was trading at about 20. Today it gaps up. Right, it gaps up. Now, if we base on traditional way of analysis, right, chances are we might see the price gap up to this trend line, which is about 28.5. Right now it is 25.7, 28.5. So there's some more room to go forward. So I'm not sure why the VIX spiked up. I don't know what kind of event. I've tried to dig out some event. I can't find anything, but just VIX just spiked, right? So when we see this big spike, well, it is no good for the this stock market, right? The SPY. If you take the SPY, we can see the SPY last week. In fact, not last week. Last week he had dropped about 0.6%, but overall from the top until the last week price, he had dropped total 2.8%, right? And I was thinking that this S&P might potentially move even lower, right? You can see that there are a lot of multiple low here. So we might see the price actually move lower to grab some stop loss. Okay, grab some stop loss below here and then move up. Okay, so I think that with the VIX still have way for the upside. And we take a look at the S&P, it has room to the downside, especially this triple bottom, which means that below there are a lot of stop loss, right? So chances for the price to move lower to grab some stop loss before go higher is very, very high, right? And already we see the VIX spike. So if today we see another bearish candle, this will cause market to move even more away from risk. Right, this will cause market to move even more away from risk. So this is very important because if we this is one of our trade idea, right? We are constantly looking for what is the market risk appetite. It is risk on or is it risk on off, right? So we look at the VIX, we look at the stock market. If today we have another bearish candle, already we see the VIX spike up to 25.5, right? So if we see another bearish day, this will cause a lot of traders to move into the safe haven, which means that the yen will benefit from this movement. Swiss franc, dollar, maybe gold as well, right? And then if we trade on a cross currency, example, the euro against the commodity currency, we will tend to see the euro will tend to move higher against the commodity currency, right? So once we understand this market is whether it's risk on or risk off, immediately we know which are the currency we can pick and buy and sell. That's why we have to pay attention, especially leading to the Wednesday FOMC meeting. I think this is going to be, but I think the market is actually, it must be getting ready for tapering. That's why we see the stock market is trying to move lower. I don't know, but because otherwise I cannot see any other reason, right? There's no other reason that can cause this market to go risk off, because remember last week we talked about the China, the property developer. Last week we talked about that Monday, right? And already it happened already. You can see that a lot of Chinese, they already cannot get they are demanding their money to be refunded, right? Because the property is not completed, right? So I mean, there are a lot of news come out from China, right, about the property. What is the companies? I forget again. Anyway, you know, eh? So beside that event, I don't see any other event that actually can cause risk off, But what we see right now is market is risk off. You can see the VIX gap up and continue. It looks like it's going to continue to go up very, very, no, it's full of strength, right? So I think we can continue to go see this higher until Wednesday. We'll see how the VIX perform, right? For now, I think we should look for some kind of risk off opportunity, right? Look to long yen against the commodity currency, etc. Okay. And if you take a look at this now, this is a VIX, right? And I also show you the SPY. SPY is very heavy. Now another chart that I want to show you is this TNX. Okay, it's a 10-year Treasury note yield, 10-year yield basically, right? Now take a look at the 10-year yield, right? We have been moved up to about 1.7%. That is this is the yield, yeah, the interest rate. And after 1.7, you can see the yield has been slowly moved down until 1.12, and now it moved back higher, and now it start to test this high 1 time, 2 times, 3 times, 4 times. Is it going to break? I don't know, right? We can never know. But looking at this price constantly making a higher low, right? It looks like the market is squeezing the price upwards. The pressure, it looks like it is upwards, right? So if we see this chart TNX break out above, right? This can fly up very fast because we are talking about interest rate, right? So this one can go up fast, maybe to test this high again, right? So if we see the interest rate go up, what's going to happen is the stock market is going to, I don't say crash, but we're going to see a deep pullback in the stock market. It is not going to just pull back to what I showed you just now, the SPY. Let's go back to SPY, take a look again, right? So now I am thinking that we are going to expect the stock SPY to pull back to this orange line, which is about 434. You can see that the pre-market, the future market already gapped down, open lower. You can see exact even below my orange line, right? So I was thinking that price might just move lower, but if we see the VIX and we see the interest rate breakout, this can move down all the way down to here to fill up this, right? This TO, this trap order, right? This become a reason for the price to move lower, okay, and then it move higher. Okay, so get ready for this, because if we see the VIX come down, I can tell you that we are going to see more trader move away from risk, right? So I think I will look for risk of opportunity rather than anything, right? So this become I think is the main thing I'm looking right now, right? So pay attention to the chart TNX, right? TNX. Okay, so now another one I will show, TLT. Okay, this is a 10-year bond, right? Now, if you are trading stock, I'm not sure anyone how many of you are trading stock, then you want to sell this TLT. Okay, you can sell the TLT, but if you are using the options, you can buy a put on this TLT. Or if we already can see these two lines, we have a bear call spread on this, right? And 155 to 160, right? The risk is $5 risk. In other words, when I have a bear call spread, right, I expect price to remain below 155. So long it's below 155, right, and it expire this orange vertical line, which is 15th of October, then of course I keep the 100% of the premium that I receive, right? So I'm expecting this TLT to continue to remain low, right? TLT is the inverse relationship to interest rate, and I'm betting that the Fed will have to increase interest rate, which because of the inflations. Let's see what happens, right? Even on Friday, we might see they might even tapering, right? It's a way of it's a precursor for increased interest rate, right? So if you are trading a TLT, right, I think I'm not sure whether broker have or not. If you have your broker have this TLT CFD, you can actually look for a sell, right? Look for a sell on this, Now, if you are trading option, you can put a buy, a put on this, or maybe a back call spread on this. Okay. So now the next chart I've covered so far the SPY, the VIX, and TLT and the TNX. Right. TNX is related to interest rate. VIX is this is about volatility, right? And then also I talk about the SPY. The next chart, which is very important, which is the chart that we always pay attention, right? Which is the DXY. Okay, DXY. Now, if we zoom out and take a look at this DXY, okay, we can see that it was hunting on both sides, up and down. All the stop loss get stop hunted, right? And then it moved lower, downtrend, downtrend, downtrend. And here we see that market make a higher high. There's a change of market behavior. You can see that, right? A higher high than this, right? We have change of market behavior. So it tells us that this downtrend is potentially over. And not only that, we see the price actually start to make a higher low. Okay, it make a higher low and the price rally up, make a higher high. This high is higher than this high. So basically, technically, we can say that DXY is in an uptrend, right? From all these price actions. So if we see the DXY, you can see that this is actually accumulations, right? Here is the view, right? Accumulations, right? So once the price break out this, we can see the price goes up to here to test this, right? You see this is all gaps. Okay, so we are, and then here is another gap. We are not looking for all this yet, but just over here, if the DXY dollar index can move higher, this is going to be a big problem for the stock market, because first of all, we say that the VIX is already spiked higher, right? This tells us that something is trader don't feel comfortable right now, and other than that, they don't tell us much. What we can I show you just now is the TNX, right? We saw the TNX has actually almost break out. There's almost breakout. Okay, almost breakout. So if the TNX is interest rate, if interest rate break higher, and also we also have the dollar break higher, this is like a what? The what? They call it what? 1-2 punch. Yes, 1-2 punch to the stock market. Stock market is going to have a big pullback, right? If we see this do happen, so I say if we see TNX break out higher above the resistance, and it looks like dollar is going to move even higher, if these two happen, right, we are going to see this SPY not only pull back to what we saw just now, it's going to pull back a lot more, right? If we see that happen, I think for this to pull back all the way here is possible. Okay, to 422. Now, why 422 is possible if we see those two things happen? Because if you take a measure move from the high of this until this level, it is only about 7%, right? It means that potentially the price can go even lower to here, up to this low, right? It's about 10%. So in other words, potentially, I say potentially, we might see SPY drop all the way to this zone, which represent a 10% move from this high to this. That is a 10% move. Now, why I say this is a 10% move? Now, if you remember last Monday, I talked about comparing this month against with last year, the same month, September, right? So if we go back to last year, September, which is here, which is this pullback, right? This pullback. So from this pullback, I think we said that from this high to this low, it was 11% pullback. That was in the month of September, and then followed by October. Now, in the year of September, October, usually the stock market, of course, this is I don't know why the market behave this way, but it behave this way, right? September, October, we tend to see the market pull back, right? And now we come back September again. So if this history is going to repeat again, we can expect SPY to pull back all the way another 10%, which is 400, right? Of course, I don't expect this to happen unless there's some catalyst. I don't see any catalyst to move the SPY over until so low. The most I think is maybe come all the way to about this orange line and then unlock this trap order and then move back up, right? I don't expect it to fall below 10%. But yeah, in the event if we see the TNX, so I want to say again, in the event we see TNX fly up, break above this resistance line, it means that interest rate go up. Also, if we see the dollar at the same time move higher, right? This two is the daily 1-2 punch to the stock market, and then we can see the SPY can potentially retrace down by 10%. Now, if SPY can drop by 10%, I can only imagine that the trader will be money will be all run away from stock market, run away from high risk investment, run away from commodity currency, and go into the yen, go into the Swiss franc, go into gold, go into dollar, go into all the low yield currency, right? So this is something that we need to pay attention because it can happen very fast. All right, it can happen very fast. Okay. Now let's come back to analyze the dollar DXY again. Last week we were talking about potentially, right? Dollar might move back up to make a LPSY. It stands for last point of supply. Now, usually after these distributions, right? This is the U-Town. After U-Town, we often have a last point of supply. So after this U-Town, we have a last point of supply, price will drop lower, then another second last point of supply. Not necessarily must have a second one. Sometimes it's only happened one, right? I just give you it can happen. Then we see the price start to break, it pull back and then it break. Okay, so this is one potential movement that dollar DXY might have, right? So it looks like we are creating the last point of supply right now. And also I often say that I don't like to trade when it is in the range, even though I know that this look like a distributions, right? This look like distributions, but usually I try not to sell at the high here. I try not to. Sometimes I do, but I try not to sell, because if I try to sell at the high, this distribution, right? The price, we have a buying climax, uptrust, U-Town, last point of supply. Now, instead of last point of supply, if I take a short here, this can move even higher. So theoretically, you can see that as long as this low never take out, as long as this low is still remain intact, this is still in the uptrend, right? So if we take a short here, imagine if we take a short here, take a sell here, expect price to move lower, but the price can potentially continue to move higher. So that's the reason why usually I do not want to take a trade when it is in the range. I prefer to wait for the trading range to be broken, right? And then it pull back. That's where I start to sell, right? And then take the weight down, because this is already confirmed you want to go lower. But here, if I enter on the and over this area, I'm trying to preempt that this is going to be a distribution, but this might not be a distribution, right? So this is the reason why I do not want to take a trade. But of course, if you like to take a trade there, of course you can, right? So long as you understand that this can potentially move higher and continue to move higher. Okay, so that is a DXY. Now, of course, right now we can see the DXY is already coming to this supply, right? Now, the question is, how can we know whether the price is going to continue to go higher, or whether the price is going to just hold out here and then drop? How can we tell? Well, as I also mentioned many times, we can estimate but not guarantee by going down to lower time frame, right? So if we go down to 1 hour time frame, we already know that price is already in the at our point of interest. Okay, so right now at this level, I would like to see another distribution or another market change of market behavior, which means that I like to see something happen like this. We see price moving up like this, right? Maybe moving even higher, and then we see the price drop like this. I like to see that happen, and then because if this happen, it means that this is a change of market behavior. Then I'll be looking for a short when the price start to retrace back higher and take a short at this level. That become my new point of interest. Then I'll start to look for a sell there, right? Now, of course, there are many. Today I have posted another video in the Moodle. I'm not sure you guys actually saw or not. Let me see. Let me share that. Okay. Now, can you see this? You can see, right? Okay. So today I post how to use the tick volume to confirm a trade entry. Okay. I actually post in the this one is no, you got everybody can see that, right? But this one is in the trading room only, right? This one, for those of you on trading, please go and see, watch this one. This complete one, right? When watch this, how can use volume? I will briefly talk about it as well today, right? And so this can help us to confirm whether this is going to be a confirmed breakout, because sometimes it can be a false breakout, right? And we can use the tick volume to help us to confirm. Now, again, I want to say nothing is guaranteed. Everything is about probability. Now, if we can have one more additional tools to give us the odds, why not we take it? We will take it, right? So we can use a tick volume to help us to confirm. But again, like I said, it just give us additional tools for decision making, not the guarantee. Even though we see the volume confirm our bias, but there's no guarantee that it will work, all right? Okay, so that's what I see on the dollar, right? It is moving higher. It's very, very bullish. Now, if the dollar DXY is so bullish, obviously we can expect the rest of the major is heading downwards, right? The rest of the major is going to head downwards. Then if we take a look at this pound dollar, now look at the pound dollar. Ooh, go down all the way. All right. Okay. With the dollar so bullish, with the VIX as a gap up, with all the yen cross all moving down, right? You don't want to look to buy this falling line, right? This is just too risky, right? If possible, I would like to wait for a pullback and then sell, but not to buy, right? Because it's the dollar is just bullish. Okay, so I don't see any opportunity in this pound dollar, all right, because it keep falling. Okay. We can see that this is a distributions, a 4-hour distributions. Okay, and price break. So we might see the price pull back. If we see the price pull back, we have a gap here. We have this backup, right? So this will be, if we see the price pull back, okay, this will be the area I'll be looking for short. This zone. I'll wait for price to enter this level, right, and looking for sell here. Okay. Now let's take a look at the euro dollar. Euro dollar. Euro dollar is the same thing, right? I don't see opportunity on euro dollar because it's one-way traffic, right? Same thing. Okay. But if we look at the higher time frame, right? You see this green line. If you look at the daily time frame, or even weekly time frame, right? Weekly time frame is not so messy, right? You can see the price actually, we have make a lower high, a change of behavior, right? The price make a lower high here. So, okay. So it looks like, as I mentioned before, right, this low is not validated because it did not make a high. This also not validated. What is validated is this low. Okay. So chances we're going to see the price go even lower to take out this low and it respect this low. Okay. It's going likely to take out this low and respect this low. Right. And then we'll see that this is a high, a lower high, right? And this is a low. We are likely to make a low lower than this low, right? So the logical place is this green line. So in other words, I think that the euro dollar have more room to move even lower. Okay. All right. So so we go to daily time frame. I don't see good opportunity in this pair. Maybe other pair we can see. I'll show you later. Right. Take a look at the dollar sing. Now this is what I see in dollar sing. We have this bullish. Okay. And if we look at this amount of data point, we're in a downtrend, right? We have to make a higher high, price pull back to this, rally up, make a higher high, price pull back again. We still have a gap here not filled yet. So I think that potentially we might see a price goes up, fill this gap, okay, and down, fill this gap, then go back up potentially. All right, let's see. So now, if we trade based on the range, this is the high, this is a low. It break this low, so this is a lower low, right? So if you are looking to trade this time frame, now you are waiting for price to rally up to this to fill this gap and then sell. Okay, if you are trading this time frame, but if you are trading this time frame, even shorter time frame, then you can see that you have a high, you have a low, you have a break. So you are waiting for price to come back down to buy, right? So it can happen, right? You can see that it both might seem not logical. How can one buy and how can one sell, right? But if we look carefully, we are still on the daily time frame. It's easier, not so much noise, so easier to see. The price right now arrived this CP supply. If you already this gap, if you this gap, you arrive this CP supply. So we expect a seller to come in. So at this point, you can see that we actually have, if we trade on this amount of data point again, we are actually in a bullish trend. Let's use a different color. Okay, this is a high, this is a low. Okay, and this is what the price took out the high. So now if we trade on this data point, this is bullish, right? So if this is bullish, I want to buy, right? I want to buy. We can look to buy. Let's go down to lower time frame, 1 hour. Okay, so this is the high, this is the low. Okay, now I want to buy. I want to buy as low as possible, right? So if the price drop below, we have a gap here need to be filled. We have a gap here need to be filled, right? So if the price can get below here, this area, I think it's we can start looking for long, anything that below here, below this line, right? If the price drop below here, we can start looking for long. Okay, take a partial profit there. So this is based on this time frame. But once the price go to this level, you take a profit. You can expect the price continue to go even higher to fill this gap, right? So if we see the price down and you manage to get in somewhere there, take a partial profit here, right? And then take balance profit here, because this is the gap that price might come and fill. So that is your long trade. This is your bullish trade based on this amount of data point. But if we trade based on higher time frame, so now we have one trade here, right? So now if we look at the daily time frame again, which is less noise, easy to see. Okay, we have a long trade here. Now, if we take a look at this green line now, let's erase off the orange line so you will not be confused. Now, if we take a look at the orange line, the price make a high, the price make a low. It took out this low, make a lower low, right? So this is bearish. If we trade this amount of data point, this is bearish. We should expect the price to move higher and then go down, right? But just now, we only trade this amount of data point. Okay. Now, if we trade this amount of data point, we are bearish. So here we can bullish first. Price go up to this area. We turn bearish, take the price down, right? It can happen as well. So now, if we based on this higher time frame, we can see that there's a reason for the price to move higher because there's a gap here need to be filled, right? So chances are we're going to see the price go up to this level. So if you are not going to long, you can wait for a short here on dollar Sing. Okay. Once the price tests this, you see there's a gap below here. Potentially price might even go even lower, right? Go even lower before it can go higher. Okay. So I think this has a better opportunity set up compared to the euro dollar. I think, yeah, this is better. Looks more, make more sense. Okay. Any question on this dollar Sing? Is that okay?
Yes, Benny.
All right. Now, another pair which I post in the trading room is this one, Euro Pound. Now look at Euro Pound, right? This is where I set my alert there, 85.80. This alert was set, I think, since last week, but it never get triggered. Now, finally, I see the price come back to this level. So my point of interest, my POI is here above. Okay. So I'm looking for price to go up here and do what it need to have to do. And then it turn around, right? I expect the price to move lower. Let's see. Yeah, this too early. I don't think it will happen tonight because this is a 4-hour time frame. If you go to the 1-hour time frame, you can see that we don't even see any kind of ranging market yet. We continue to see the market continue making a higher high, higher low. This is a uptrend kind of pattern, isn't it? Right? I think that there's a good chance for this pair to move higher, right? Reason is because of this, all this high is there, and also of this trap order, right? You can see this trap order stand out like a sore thumb, right? You cannot miss this trap order. So I think potentially we're going to see the bank push the price higher, and in this area we're going to see a drop here. So this is an area I'll be looking for a short. Okay, that is the Euro Pound, and I don't think it will happen tonight. Let's see whether it happened this week or not. Okay, and that's what I see on Euro Pound. Now the other one I'm looking is this Pound Cat. Now look at the Pound Cat. It arrived this previous swing high, which is another very prominent supply. It took out this all the stop loss above this swing high. Okay, it took out all the stop loss. So why you want to do that? I think there's a good chance that price is going to reverse back down. Okay, And of course, you can say that now you are trading the pound against the CAD, right? This CAD is a commodity currency, and since that the market is risk off, that is the reason the pound is actually pushed higher against the CAD. Well, it's possible, right? It is possible. So if tonight, if I see the VIX start to pull back, now let's take a look at the VIX again. Now, VIX is a very important chart for us to see if you are trading based on the risk on, risk off theme, right? Now, look at this VIX. It's a 1 hour time frame. If I go down to let's say 10 minutes time frame, if I see the VIX start to form, right, start to form that kind of consolidations, go through the phase of distribution, things like that, and it break the trading range. So it means that VIX is moving back lower. Then that is the time when I can look to short the pound CAD, right? If I see the VIX continue to make a higher high, higher low, I'll be very, very worried to take a short on the pound CAD, right? See the pound CAD, it can continue to move even higher, right? But the moment I see the VIX start to turn around, then looking to sell pound CAD is become a logical trade, right? We can see the pound CAD start to go through a phase. Maybe you can see that we have this could be a Utah, right? And last point of supply and drop and things like that. Okay. So I'm looking to sell pound CAD, but I will pay attention to the VIX as well and pay attention to VIX, whether the VIX is continue to make a new higher high, higher low, or VIX has actually go into a consolidations and break to the downside, break the trading range to the downside. That will give me a more conviction to short the pound CAD. Likewise, pound Australia, right? You can see that pound Australia also arrived this my point of interest. Okay. And what happened? It actually went through a phase of distribution accumulation. You can see that this is the Utah. Now, usually after Utah, right? If you pay, we will see the price actually drop, revisit this low, okay, and then go back again, make the last point of supply, then it drop, maybe another last point of supply, maybe sometimes only one time, right? And it drop and pull back and go down. Okay. So again, if you take a short before this trading range confirm breakout here, if you take a short here, this can continue to go even higher. So again, it's kind of risky, right? But if you can look at when the price make a low here again and it start to move back up, right? This is an area that you want to sell. Before you sell, pay attention to the VIX, right? To affirm whether it is still risk on or risk off, right? The reason why is because we are trading pound against Australia. Australia is a commodity currency. If the market start to go back to risk, it means that we'll see the money flow back from pound back to Australia, which means that this pair will move lower, right? So pay attention to VIX as well, right? The other pair also have the same characteristic, which is the pound yen, pound New Zealand, right? Pound New Zealand, you can see that the trading range already confirmed break. We already see this trading range break, right? This Utah, last point of supply, you see, break. Look at this ERC, it break, right? So price pull back. Let's see whether you will pull back higher or not. You see my alarm set at 1952.20. I'm going to sell as high as possible and my stop loss above here, right? And if the price can come out to this area, I'll take my profit, right? So let's see what happened. We see that all these three pair, the pound New Zealand, pound CAD, pound Australia, all set up for a sell, but have to pay attention to the VIX. Okay, and already we see the pound New Zealand already confirmed we have a trading range break. Pound Australia, we already see a distribution in the process. Pound CAD, not yet. This is the latest, not yet, right? It's very slow. So I think the among all these three pair, if we're going to see things happen, it's going to be this pair first, right? Pound New Zealand, because the fact is pound New Zealand already confirmed a break, right? So if we see the price move higher, we can take a short there and go down. Okay, so that's what I will see. And now before that, right, this is a 1 hour time frame. I want to pull up this volume. We can see that this break, it break the low, it also break this low. Okay, it break with the volume pickup. This is good, right? This is what we want to see. You see the volume pickup as it break, right? It means that their seller comes in. Okay, so it is still too early, right? Because when US market open, we might see the price go back one more time to fill this gap. Okay, this is too early to short. Let's wait for US market. If we see the US market go back, it go back up, go again, I will definitely take a short there. Stop loss here, because this is a trap order. You can see, right? Price might even go even higher to test this trap order. Look at this. We have a lot of high here. We have a lot of stop loss above. Okay, so this might attract the price go up and then go down. Okay, so I'm going to wait for price to come back here and sell. Okay. I think that's it. That's it, I think. Okay. Dollar yen, it doesn't go to my level, so nothing, right? Eurocat. Eurocat is something. Look at this. This kind of parabolic movement, I'm very keen, right? Usually with this kind of movement, it means that it cannot last. It not sustainable, right? Usually we see the price reverse. Okay, especially it tests this, right? So I'm very keen to look at this level, go down to lower time frame. Okay. Let's see what happens. Yeah, we have not seen any kind of sideways movement yet. Can this be a V shape? It can be, right? We do not know. But anyway, this is a 5 minutes time frame. We can see the price actually do this, right? If this price break like this is a break of structure, isn't it? A change of behavior. Can you see if the price break this low? If the price break this low, this is a change of behavior, right? I'll be waiting for price to pull back and looking for a sell around this area. Remember, this is a 5 minutes time frame, right? Wait for price to pull back, look to sell. Okay. Now, we have not seen any break yet. If we take a look, go down to even 3 minutes time frame. No, nothing. Yeah. 1 minute time frame. No, nothing yet. Yeah. So let's see. Nothing happened yet. Let's see. Okay. Any currency that you want to see? Any kind?
Benny?
Yes.
Sorry, I've got a question. You know, earlier when you went through the indicators, right? You did TNX as well as TLT. So TLT is the 20-year benchmark. So basically, we can use either TNX or TLT, is it? Or it needs to be
TLT is a bond. Actually, it's a bond. You actually if the interest rate go up, you want to sell TLT bond. They are inverse relationship. Remember?
Yep.
Yeah. So if you see the index, if you see the TNX break above the resistance, then you want to sell the TLT.
Okay, so essentially, you can either use TNX or TLT, right? Because they're both bond.
Yeah, one is trading the interest rate, one is trading a bond. They are all the same. It's just an inverse relationship. You got it? I think TNX might not able to. It might not. It's not tradable. I think. I'm not sure. I think it's TNX. It's not tradable, but TLT definitely is tradable.
I see. Okay.
TNX is not tradable. I think. Yeah. That's why I say that, yeah, I repeat again, if you see TNX break above the resistance, TNX, this is a 10-year treasury yield. Okay. Oh, it gapped down already. See here? It gapped down already, right? If it break above this line, okay, it's likely to go and test all this. So you want to short the TLT. Okay. Yeah. Gold, yeah. Okay, let's take a look. Take a look at gold. I'm not sure whether I got time to take a look. Okay, anyway, take a look at gold. Because I want to show you how to use the tick volume to confirm entry. Okay, go. Take a look at gold. Right. Bearish, right? You can see that based on 1 hour time frame, if it based on daily time frame. Now, if you still remember last week we talked about price can whack both sides, right? And then you know, because they have lined up all the stop loss. Okay, yeah, this is the one. Last week I was saying this is, you can see that we have a lot of top, and then this area, can you see double bottom, right? So price came down exactly, make another bottom, right? So now the more we have 1, we have 2, we have 3, we have 4, we have 5, we have 6. This become a very strong support to many traders, right? So it means that there are a lot of people start to put their buy limit above 1678 or even 1007 and expect the price to go back up. And if they do that, very likely they're going to put their stop loss below this swing low, right? So if they buy at 1007, their stop loss is going to be a sell order. Their stop loss is going to be a sell order, right? And all these low, you can see that it's all specially engineered low, specially designed to let the trader to put a buy order here so that they can put a stop loss below here. And stop loss, if they are buy order there, their stop loss is actually a sell order. Okay, so why we think that the bank, the institution want to create such impressions that this is a very strong support and therefore attract a lot of buyer coming to buy here, expect the price go up, right? Because simply because the institution also bullish, right? They also bullish, but they need liquidity, right? So in other words, if they're going to buy order here, their order is going to be so big, right? And all this stop loss, which is a sell order, is going to act as a liquidity to fit this buy order. And therefore, we're going to see the price go down. Very likely, right? If the price start going down, we're going to see the price punch through, grab all the stop loss below here, and then reverse back up. Grab all the stop loss here, and then reverse down. Okay? Because that's how the institution are doing, right? They grab all the stop loss and become profit for them. Okay, so I think that this is going to be something like that. But remember, I'm based on the daily time frame, right? So this might not happen this week, right? But this is a big picture. Okay, so now if we go down to 1 hour time frame, so what do we see? Well, we can see the price break lower to take out all the stop loss, right? Price break lower to take out all the stop. Those are people who put the order there, all get stopped out. Now, look at this. If you see this kind of distribution, as I mentioned many times, you don't want to buy. Look at this. This is basically a distribution, right? Look at this. Price has rallied up from the low, go up, and start to form pattern, right? You can see that it make a high, then it make even higher to take out the stop loss. It make a high, even higher to take out the stop loss. It make even higher to take out the stop loss. You can see that the buy side liquidity constantly being taken out, and it respect the sell side liquidity. They are creating liquidity below here. Why? Because you want to move lower, right? So the price, after it create all this liquidity, right? All this liquidity, you see what happened? Boom, down, right? It go down. So this is a smaller version, a lower time frame version for this daily time frame. It can happen in this, right? It can happen in this. This is you can see that we have a lot of low here. It means that this low are specially created with there are a lot plenty of liquidity here, right? So when the price drop lower, we might see a very forced movement, right, down and then move back up. Now we see the price already move lower. It grab all this liquidity. Now I think the price in the short term, we might see the price start to go higher. Right? If price go higher, it grab the liquidity here, and then it move lower to grab the liquidity here. So the price is constantly moving around, up and down to do stop hunting and grab liquidity. Okay, so let's go back down to 1 hour time frame. Now in 1 hour time frame, after they stop hunting all this, we can see the price start to now into accumulations again, right? It is now he start to go through this is a buying climax, automatic rally. We have a test. We have a spring. This spring is below this low, buying climax, right? And then we see the price start to move up higher. So I think we're going to see the price start to trend for a while, trend for a while, right? So like I say again, I do not want to trade when it's in the range. You might, if you want to trade this pair, wait until it break. If you are bullish buyers, which I think in the short term, we might see the price start to move higher, right? You want to wait for price to break above the trading range, and then it start to go long, right? Why I think the price likely to go higher, because it has already consumed up all the liquidity at the swing low, right? So now it is time for the price to move up higher to take out all this liquidity at the swing high. Let's look at this trap order here. So obvious. You cannot miss this trap order, right? So I think the price like to go up here, take out this stop loss, go to this area, and then roll over again. So this can happen in a short term, right? And this coincides with the risk off, right? If we see a risk on, if we are in the risk off, which already see the risk off, if you see the S&P drop again tonight, then we're going to see a lot of money start to flow back into the gold, and gold is going to push up further, right? Because gold is a safe haven asset. Okay. Now I want to show you guys one thing, which is the Australia yen, just to show you how you can use the tick volume to confirm entry. Yeah. This is not a setup, but just to confirm an entry. Put the 4 hour time frame. Oh, yeah, this here. Okay. So you can see that we are in the 4 hour time frame, we were in the uptrend, and now price start to make a lower high, lower low. We are clearly in a downtrend. You can see that this kind of bullish, very bullish ERC candle usually not lasting. It cannot last, right? We have this distribution before. Look at this. Institution was distributing all the way. They are selling, break lower, price pull back, right? So it's a very typical kind of movement. We see that, okay, price trading in the distribution like this, okay, and price break, price pull back, we are looking to sell, right? So that's exactly what we are looking to sell. So now what I want to show you is, once we have defined our supply, which is here, we wait for price to enter this supply. Okay, wait for it to enter. We are in 4 hours, so go down to 1 hour. Okay, we are looking at this level. We do not want to put a sell limit there because price might just break through and take us out, right? So we wait for price to enter our point of interest, which is this supply where we want to sell. Okay, so now we see a bearish candle. We do not know yet, right? You can see the price already fill this gap here. This ERC gap is filled. Will the price go down? We do not know, right? So we go down to lower time frame, 5 minutes time frame. So what do we see in the 5 minutes time frame? Immediately, we see there's a very familiar pattern, right? Distributions, right? This is the typical distribution. So what we're going to see is if I already have a bias to sell and the price show these consolidations, clearly I need to wait for price to clear this low. I want to see this low be clear first, right? This is like a line on the sand, right? There's a line on the sand. Okay, so we wait. This is a 5 minutes time frame. We wait, right? This is the line on the sand. Okay, that's the line on the sand. We wait. Nothing happened, right? Nothing happened. No trade. Yeah, no trade. No trade. No trade. We want to wait for the trading range to break. Okay, you can see what happened. Yeah, it come back up to test, right? Grab the stop loss, create more equal high. Okay, again, don't want to break. Yeah, testing our patience. Again, no break. A lot of stop hunting. You can see that it swing on both sides, right? So if you are not patient, you trade this trading range, you get whacked upside down. See what happened now? Double bottom, a lot of stop loss below. The price will come down to take the stop loss very fast, very soon, before you go back up again. Look at this. This is what we want to see. ERC break, right? Can you see this break? Now, we are not sure whether this is a genuine break or not. So what we're going to do is we're going to pull up, take a look at the volume. Is this a real break? Now, we take a look, break. What happened to the volume? Almost the same, normal, very ordinary. We don't see, even though we see two candlesticks down, ERC down, do we see any spike in volume? No, it means that this price movement down, it doesn't accompany with selling, no selling. If the price move down with no selling, it means that this is likely to be a false breakout, a stop hunting, right? So if we see something like that, this becomes very, very suspicious. We are not interested to sell yet, right? Okay, we are not interested to sell yet, so we wait again, wait for some more opportunity. Okay, price go back up again. You see what happened? Now price go even higher, right? Now price go even higher to take out all the stop loss above, right? You see the stop loss above, double top, right? All the stop loss here, they take out. Now, as the price move up, you can see that this volume increase. Why the volume increase? Because a lot of transaction being happen right now. A lot of transaction, right? When the price move up, because there are a lot of stop loss here, so transaction, right? Stop hunting, right? All this, a lot of trading activities. So we see the volume increase. So that is very normal. Okay. Look at this. Another ERC down. Now, this time around, look at the volume. Big volume. Now, I want you to compare this volume, this ERC down with this volume, with this two ERC combined with this volume, right? Clearly, we have seen the volume spike. So this tells us that this ERC accompanied with volume. There's a lot of selling over here, okay? So basically, it tells me that this is likely to be a genuine break. This is a genuine break. So what I can do right now is I can go even down to even lower time frame, right? 1 minute or 3 minutes. You can see that volume start to spike up, right? And look at the gaps that we have here. Look at this gap that we have here, right? We know that very likely the price is going to go up and fill this gap, right? It might not fill up 100% here, right? So we can cheat a little bit by the market by put our sell limit here, 50% of this gap, right? So that's what we do. We put a sell limit here. Okay, our stop loss above this high, this high. Now, where is our target? Well, our target is using the 1 hour. Go back to 1 hour. Where is the low? Okay, here, right? So our target is there. Okay, How come like that? Again, this is a gap that we want to sell. So this is where we want to take profit. So let's draw a line. Otherwise you miss it again. Okay, that's why we want to take profit. We go back to three minutes. No, see the gap here, right? We want to cheat the market by taking the 50%, right? Because sometimes the price might not fill up totally, right? So we want to put our sell limit. It's somewhere there, 50%. Stop loss above this swing high, or if you can put above this swing high. If you scared to get stop out, right? Put above also can, up to you, right? Or here, up to you. And then where's our target? Our target is the orange line. So this is our target. Okay, our orange line. We will have a potential 1:4 risk reward. Fantastic risk reward. Okay, so continue. Okay, our price trigger. See our price trigger by that red candle. Okay, we want the price to move lower, take out this low. We need to have this low taken out. Okay, as the price breakout, we can see the volume start to increase. This is a good. This is good. This is healthy. Our target is right below, which is here. Look at volume. Okay. Target. Still don't want to hit. After this scale of volume, you better take a profit now, because this is volume, is a stopping volume, right? See this orange line, you want to get out. Okay, be very, very dangerous. But anyway, right? You see something like that, right? Price after drop, you go horizontally, take a profit. Risk reward 1:4. Okay, so this is to help you to enter the trade. Now remember, this is not a setup. You must already have a setup based on the higher time frame. This is when the price is already in your point of interest and you are about to pull the trigger, right? Because I received some inquiry how to enter the trade, right? So this can help you to enter the trade. Okay, any questions? The tick volume, you can use any volume, any kind of volume, MT4 volume. This is the same thing as MT4 volume. No special volume, just a normal volume. If you go to MT4, you also have volume. Any kind of MT4 chart will give you a tick volume, right? Nothing special. Okay. Okay. No questions. We'll end here. See you guys next week. So pay attention to the few chart I mentioned just now, the VIX, the TNX. If you see TNX break above, you want to sell the TLT, right? And then pay attention to the dollar index, right? If you see the dollar index and the TNX both move up high and fast, right? You know that market is going to collapse in the stock market, and if the stock market collapse, trader is moving towards risk off. It means that money is going to flow back into yen, Swiss franc, dollar, gold, right? Commodity currency is going to drop. Okay, so this week you're going to pay attention to all this. By Wednesday we're going to have this FOMC meeting. Okay, welcome. All right, thank you very much. All right, see you next week, guys.
Benny.
Bye.
Thanks, Benny. Thank you.
Thank you.